So to talk more about the importance of doing business in China, I'm joined by a man who dined with the Vice Premier as part of his visit to the UK. Bob Stefanowski is North America and Asia Chairman for private equity firm 3i. So I guess it was a pretty interesting night for you.
It was.
You know, dinner with the Chinese Vice Premier. What were your impressions of him?
I thought it was very encouraging. There's clearly an effort on both sides, the UK and China, to open up trade. The Chinese Vice Premier was pretty honest about having to encourage more foreign direct investment in China to offset some of the exports that they do. But overall, very positive atmosphere and a willingness to cooperate going forward.
So talk to me then about your investments in China. I understand that you've actually been involved with the country for the past 10 years now.
Sure. We've done 11 investments in China over the past 10 years. And when you step back from it, China is a company with 1 billion people. It's growing at 10% a year. And we view that as being very attractive, particularly in today's economy. And recognized that about 10 years ago, got on the ground early, and have been very successful in terms of trying to add value to Chinese companies. We've got an international network, and we can help those Chinese companies expand overseas. And similarly, companies that we have in the UK and Europe, we can help them get into China, whether it's access to customers, access to manufacturing facilities, and having that balance we think is important.
Presumably you're eyeing up some interesting prospects, Chinese companies this year, right?
Sure.
How many companies might you be looking to invest in?
Well, we're opportunistic. You know, we don't have a set number that we need to invest in terms of sectors. We're very encouraged by the consumer sector when you see the rising wealth of the middle class. General industrial in terms of the competitiveness over there. And that's both on an investment basis, Maryam, and also some of our companies that can expand overseas to help them do that.
So any indication as to how much you might be looking to invest in China this year?
Again, we don't have a specific target. It kind of, you know, we're a global firm, and we like to allocate capital to where the best opportunities are. We would hope to do 1 or 2 deals there this year, but we'll have to see.
And tell me more about the types of companies that you're focusing on. You said that you're looking at what high growth areas like branded consumer products, traditional renewable energy, anything else?
Not so much. Again, what's critical for us is to partner with a local partner in China. It's a very different environment. You've got different government regulation. So we generally joint venture with partners that are there that understand that market, that can help us develop. And we have a local team on the ground that, again, has been there for 11 years, and we find that very valuable in terms of understanding the economy.
You mentioned the difficulty of regulation. I guess there is a perception that China can be a somewhat difficult environment for investors to function in. What are the obstacles, the pitfalls?
Well, I think it's getting more transparent. I think it's headed in the right direction. The concern is always something unexpected, something that you don't see coming. The government is very efficient in terms of when they want to do something, and happens quickly. There's not a lot of debate about it. So trying to anticipate how our companies might be impacted by regulations is very important for us as an investor.
Tell me more about your overall strategy and how it might contrast or compare with your approach to investment in the West, where I guess typically a private equity firm like yourself would aim to get majority control in order to turn the company around. You wouldn't do that in China, would you?
Well, we do both, and it kind of depends on the country. First of all, to take control in China is very difficult given the regulations. And as I said earlier, we're not so sure we'd want to put ourselves in that position given the difference. So I think in China, it's a situation of trying to do growth deals, smaller, mid-sized companies that have good prospects for growth. In the U.S., which is a more established market, we think it's both. It's probably growth capital, and in certain circumstances, we do like to take control.
So what is your assessment then of the strength of economic recovery in Europe and the U.S.?
Well, you know, as everybody says, it seems to move eastward. You know, the U.S. seems to be recovering. The latest signals sound pretty good. You look at the U.K. in terms of some of the austerity measures we're taking, seems to be the right thing. Will that have an impact in the short term versus the long term? And then as you start to move east, I mean, China's growing at 10%, India's growing at 10%, Singapore 10 to 12%. And clearly, in the short to middle term, that's where we're going to see growth in middle market companies.
And when we speak about the performance of many European and U.S. companies, it seems that those that are doing increasingly well are those that are exposed, expanding in emerging markets. What do you think is the best way to make big returns by buying European, U.S. companies?
Well, I think you want to look at companies that are international. Again, we've been successful leveraging that international network. And with the growth in Asia, most of the companies in our portfolio, again, either in the medium term or the long term, whether it's a manufacturing facility, whether it's access to a customer base. They want to get over there. They want to participate in that, and we think we can help them do that by having a presence on the ground in Hong Kong and Beijing.
Some mixed signals when it comes to the state of Western economies right now. Does that mean that you are taking perhaps a cautious approach when it comes to investing in the West? Many people saying this year is going to be pretty challenging.
Well, I think we're cautious everywhere, obviously. You do have to look at the macro factors in each economy. We're very focused on our existing portfolio in Europe and the UK and trying to maximize the value of those investments that we've already made, and then being very disciplined in terms of what industries do we understand, what sectors do we understand, and where do we see the growth coming, and try to fit our core capabilities to those aspects of the economy.
Very briefly, Asia is giving your portfolio a greater boost?
It's been terrific. Again, we're in China, India, Southeast Asia, and that portfolio is performing very, very well.
More so than investments in the West?
Well, it's a mixture. You know, when you look at a portfolio, you always have some that are high performing and some that aren't. But in general, the growth rates over there are more attractive.
Robert Stefanowski, Chairman and Managing Partner of 3i Group. Great to have you. Thanks for
having
coming
me
in.